Is the DXY, the US dollar index rally over, and what does that mean for pairs like the EURUSD and the pound versus the dollar? So let's go ahead and jump right in here looking at the DXY daily time frame. Now, today we had a lot of PMI come out, which I discussed in a video earlier this week. And what you'll notice here is we got the sweep of these recent lows for the DXY. Now, today I really want to focus on the difference between intraday price action versus what is structurally significant. And there is a big difference between the two. And I'll tell you right off the bat, guys, that the worst thing you can do as a trader is to jump to conclusions when you get a move like today. Okay, so we had PMI come out of Europe. We also had some US PMI today. And we did see the DXY sell off, again, to sweep these recent lows and clear out any kind of liquidity down here below 103.10. Now, the key for this market, though, it has been, is where this market is closing. Okay, so the daily close is what's going to matter here with regard to areas like 103.10. But structurally significant is very different from what we're seeing here today. None of this right now is structurally significant. Sure, it shows a bit of weakness, and it shows that the market wanted to take out the sell side liquidity down here in this area. But 102.60, like I've said recently, 102.60 is going to be the key here as far as the structure goes, because notice back here, you've got these highs, you've got this low, you've got the highs through here. And so 102.60, as long as the DXY is above this, there is no need to get bearish on the dollar. Now, if you're an intraday trader and you were shorting, up here on the spike, which also cleared out these recent highs and took that buy side liquidity, if you were shorting up here and you're an intraday trader, then, that was a great move, right? But if you're a higher time frame swing trader like myself, what we're seeing here today really doesn't matter in the grand scheme of things. Okay, so, once again, we are seeing the market come off, but 102.60 is still intact, and that is going to be the critical level for the DXY, because like I've said in recent videos, if we were to see daily closes down here from the DXY, then it would mean that this entire move above this key area, okay, was potentially a fake out. And that would be bearish toward levels like 101.90 and potentially back here toward the lows. Now, if on the other hand, we see the DXY recover today back above 103.10, then we're still just looking at a range-bound market, okay, with 103.50 being the key for the DXY. So this is what we've talked about for the past few videos. If you look at a 12-month chart, so this shows yearly candles. So every candle is 1 year. And I'm going to go ahead and get rid of all of these levels so it makes it a little bit clearer. So you can see that this area right around 103.50, going all the way back to 2016, this has been a critical factor. We've got the highs from back here. We've got the high right here. We've also got this closing price in 2022. So 103.50 is not going to go down without a fight. We've talked about this before. We knew that this would be a critical level for the DXY. Now look, this market could just unravel from here, right? Nobody knows where these markets are going to go. It's about using these key levels on the chart in the daily time frame to really identify changes in structure. And so far, we don't really have that from the DXY. So again, if the market closes today below 103.10, then that level flips to resistance, and we're looking at a retest down here at 102.60. All right, now if it closes above 103.10, we're looking at a range here between 103.10 and 103.50. And like I've said recently, it will take a sustained break up here in order to expose areas like 104.20. Now, yesterday's high, this is what we talk about in the VIP group, which if you want to join us there, see the link at the top of this video for 70% off lifetime access. And this is really the benefit of joining the VIP group, is that we talk about stuff like this. So here on Tuesday, you can see where this candle closed just above 103.50. So let's take a look here at what that was. So the close on Tuesday was 103.53. That is not convincing enough. And this is what I've talked about recently. You can note that even back here, right, we got a little close below it here. We got a close above just barely, and then a close back below. So this is an area, guys. This goes back to 2016. And like I've said recently, we need something very convincing up here in this area to really flip this region to support. Okay, so really nothing confirmed yet for the DXY, but I also think it's too early to sit here and talk about a significant correction for the dollar and to say that the rally is over. Look, it might be, right? It might be, but we have to use what's on the chart here, not what we want to happen. All right, now let's flip over here and take a look at the EURUSD. And if you guys are enjoying this video, be sure to smash the like button. Also subscribe to the channel and click that bell icon for notifications. Okay, so the EURUSD, this is the trend line off of that October low that we've talked about. So this is holding up on a daily closing basis. Once again, there's the daily closing basis that we talk about a lot. So you can see that right now, so far today, the area is serving as resistance. Now, this is a very indecisive market at the moment. And this also, you have to be careful with stuff like this because, I've talked about before, when you get an immediate retest like this of a key level, where we got the breakdown here and then an immediate retest with really no white space between the break and the retest, you've got to be careful because this could be a fake out to where this down here becomes our fake out. If we get a close up here in this area, then we could be looking at a situation where the euro is going to move up here toward 110 to test that key area. Okay, so, this is not a video telling you to go out there and sell the euro or short the euro just because it's at resistance right now. Again, this is a very confused market, for lack of a better term. It's just completely sideways here for really over a week now. So you've got to be careful with this one. But again, you can see where so far today, this trend line is so far serving as resistance, but the daily close is what's going to be key here for the Euro USD. All right, now let's take a look here at the pound as well. Now you can see where so far today we are getting a move higher, quite an aggressive move higher. And if you saw yesterday's video, what I was talking about there was the potential for this to be a rounded top. Now, there's no confirmation of that yet. So what I said in yesterday's video is that this area down here, between these two levels, this area is going to be critical for the pound. We would need to see a close below this in order to confirm this up here as a topping pattern and expose areas like 124. So as long as the market's above this, you've got to be careful. And really, there is no short here, in my opinion, for GBPUSD. Now, one thing you could watch for here is this trend line off of these recent highs. So you can see that if we move in here on the daily time frame, you've got the high from right back here. Okay, so we've got a high up here, we've got these highs, and we've got this high right here. Now, if today closes above this, then we could get a run back here toward 128. That's also true if the DXY closes below 103.10. Now, if it doesn't, and this up here becomes an intraday fake out, and we get a daily close down here somewhere, then that could send the pound lower back down here toward these recent lows. Okay, so the daily close is what's going to matter here. Just like the euro, although this is to a much larger extent, just like the euro, this is a very confused market. Ever since December, really, or even November, you can make the case, it has just been a sideways market. Now, you've also got to respect the trend, though, because even though this could be a topping pattern, right, the trend here is still intact. We have not seen lower highs and lower lows, so keep that in mind as well. Like I said, this is not a video to say, go out there and short the pound or the euro. That's not what I'm saying here. This is more of a video to answer the question, is the dollar rally over? And in my opinion, just to kind of circle back here, full circle, right now, I don't think that we can say that just because 102.60 is still intact. Yes, we could get a pullback down here toward 102.60, or potentially even a sweep below that. But as long as the market is holding above this area down here on a daily closing basis, we cannot say that this rally is over, at least, structurally speaking. All right, if you want more videos like this one, be sure to subscribe to the channel and click that bell icon for notifications. Don't forget to smash the like button to show your support, and also claim your 70% off VIP access. See the link in the description of this video. Trade well, guys, and I will talk to you again tomorrow.